Alright, what's up traders? This is Taylor. It's Friday the 16th of September, and we got another wild and wacky week in the books. So we'll do a quick recap, we'll go through the board, take a look at a few charts, and I'll give you guys a couple key levels to focus on for the week ahead. But as always, I hope you guys had a good week. Hope that mama market I hope she was kind to you this week. Overall, not a bad week on our end. Pretty hectic week on my end as far as, well, I'm getting married next Friday, so a lot of running around. It's interesting though. My phone was busted earlier in the week, but even after I got that all fixed up, I kept the phone off. I don't think I've kept my phone off for a few days since I got a phone back in like freshman year of high school. And I know kids nowadays are getting phones at like 6 years old. iPhone 10. But yeah, it was kind of nice to detach. So, just some advice from one trader to another. Don't be afraid to detach for a few days. Can do you some good. But we'll jump in here, guys. So, heading into the week, the bulls definitely had made some progress. And on the daily chart here of the S&Ps, you can see the progress from last week. We trapped the shorts, we squeezed the bastards, and we're back above the 50. We actually cranked out a couple closes above the 21 EMA, but then you get that gap down. I believe that was post-CPI report on Tuesday. And then Friday, today of course, we gap down and we break a pretty important level of support here at 390 on the S&Ps. So here's where I think we're at. Basically short squeeze or die back down towards the June lows. So as far as technical support, there's not too much here until we're actually back down towards 370, 365 for the S&Ps. And for the Q-tips, for the Qs, they break support today, and not much going to save it here until 280, 270. So a pretty big break of support, and that's kind of how I'm seeing it heading into next week. If you guys check out the big three signals over here, 2 hour, 1 hour, 30-minute charts are bearish. It's going to take a lot to cancel out those sell signals. Now, the other thing here is also, notice how the candles go from blue to gray. It actually starts yesterday. But the bar is going from blue to gray. That's your negative moving average cross. So that means the 21 period EMA under your 50 period SMA. Pretty much what that means is everything's kind of gearing up here for path of least resistance to be to the downside. So as we go through the board here, that's kind of the theme from today. A lot of things, a lot of important things. They broke key support. They've got multiple, sell signals on the big three indicator. That should come as no surprise. We've got negative moving average crosses. And for a lot of names out there, we actually have that sell signal on the daily chart. So pretty much a lot of things out there looking like this. Negative cross, breaking support, sell signals. It all kind of points towards a flush to the downside. So I think taking into consideration as far as technical support, there's not too much to save Big Mama here until you're pushing back towards the June lows. So for the bulls, they basically got no choice but to try to trigger a short squeeze. So as we go through a few charts here, that's kind of my mindset. Today feels like a bit of a kill shot. Shot between the eyes, as they say. And I think if the bulls can't get the S&Ps back above 390, and I think they need to do it pretty quickly, if they can't get the market back above 390, I think it's a wrap here. So keep that context in mind. And obviously, as goes the market, goes a lot of the stocks out there. So for a few important charts, if you look at the volatility index today, this still looks coiled up here for a pretty big move. So I think if you can get the VIX under, let's call it 24, in honor of Kobe. If you can get the VIX under 24, maybe the selling pressure is going to cool down for a bit. I think if VIX can break through 28, all kind of shapes up for a pretty big pop here. In the last time that the market was at, the June lows, you had the VIX up here at 35. So for a lot of things in the market that I'm watching, it's kind of like you're playing the over-under game right now. If the VIX is over 24, I gotta think any bounce in the market is a little bit short-lived. If the VIX can break above 28, then I think pretty quickly it could spike all the way up towards 35. I think you see the market go with it, so keep a close eye on the VIX as always. We'll jump over here to the dollar, which you've covered pretty much in every video for the last month or so. She's still looking pretty bullish here. So you have your mid-compression squeeze, the OG, the red dot squeeze, and we still have that buy signal here on the daily chart. So pretty simple. As long as that daily squeeze looks like it's poised to fire to the upside, you want to look at any bounce in the market as pretty short-lived. So if we wake up one morning and the dollar is under, 107, like you take out your 21, you take out the 50, we cancel out the buy signal, then the bulls really got something. These cute little dips to the 21, even the dip to the 50, I don't think it's enough here to actually flip the market back towards, back towards trending towards the upside. So for now, the dollar remains bullish, and HYG, the junk bonds, looking pretty nasty, a little bit fugly. So a little bounce here today, but you have the big 3 sell signal on the daily down to the 1 hour. And I think the way you watch HYG here is, if that continues to head down towards the lows, your S&Ps and your Qs, they're going to do the same exact thing. I think any bounce here in HYG that doesn't actually take it back above the 21 and the 50, basically, if the bounce can't fix all the problems here with the structure, I still think you look at any bounce in the market is short-lived. So keeping close eyes on the VIX, keeping close eyes on HYG and the dollar as far as trying to put the pieces of the puzzle together. But the theme from today was gap down, break key support, and that's kind of where we left off. So for a few big names here like Apple, and obviously Apple's really important, given it's such a heavily weighted stock. She a big one. So Apple today, you get the negative cross on the daily chart. Never a good thing, and we break key support around 153. So Apple is in a lot of trouble here if they can't quickly get it back above 153, 154. You got to get back above previous support. Otherwise, you take out 150. Not much support here until you're back down towards 130-ish. So you got a lot of room there. Names like Amazon, kind of the same thing. Now, Amazon doesn't quite have that negative cross just yet. But I think we're getting pretty close. And if we get the negative cross, just kind of opens the door for a pretty big flush. So the Amazon bulls, they'd have to take this back above 130-ish to kind of stop the bleeding here in the short term. Quick look at some semiconductors like SMH and NVIDIA. It's really, really nasty stuff. Bunch of sell signals there, and for NVIDIA, right, they're taking them out here. Ugly stuff. Now, the one thing the bulls might have working in their favor, it's not the signals, it's not the structure. The only thing they might have working in their favor, and you guys know this is like kind of the theme of this market, right? Get these big spastic moves left and right. They can be a little bit trappy. So potentially, the one thing the bulls have working in their favor is just the fact we're pretty oversold. Now, mind you, oversold never means we have to bounce. So if you wake up on Monday and you're bullish, I think you want to be able to point to a few things on the chart that actually suggest you're going to get your bounce. Oversold, that alone is not going to cut it, because oversold can turn into much more oversold. So for the the S&Ps here, we're down here at like 2 to 3 ATR under the 21 EMA on your daily chart, and of course we're a bit oversold on the lower time frames. So there's the potential. You could see a pretty big bounce here. Again, the key is whether or not that bounce has us trading well above, previous support here. For the S&Ps, that's 390. For the QQQ, that's 290. If the bounce can actually take us back above 390 on the S&Ps, and then your first dip actually holds support there, so previous support once again turns into support. Okay, at that point you've kind of set the the bear trap. And we could probably see a pretty good rip all the way towards 400-ish. right towards your daily 21. I think it's a rally to short, but it is something to be mindful of. So that's your over-under game. If we bounce towards 290, we bounce towards, the falling hourly 21, and then everything kind of conks out a little bit, then we're probably going to roll right back over. If we get a really good move through 390 and it holds, okay, maybe we should look for a couple of put credit spreads, something cheap to try to catch that move towards 400. So it's not going to be easy for the bulls, but that's their best shot. Get the market back above previous support, hold it above previous support, and at that point, anybody getting short today, they start to feel a little bit of pressure. That can all add a little fuel to your fire for what could be a bounce back towards the daily 21 EMA. So we will know more come Monday morning. But as far as the trades on our end, we got a couple of the shorts here. So we've got the SPX and SPY call credit spreads. Pull up the SPX here. And we opened these a couple of weeks ago. So this trade's in great shape. We got the October expiration, the monthly expiration, and our short calls are up there at 4,100. So that trade's in pretty good shape, and then we started to, in the options room today, slowly taking a nibble here on some October expiration QQQ puts. And of course, both of these trades, we're taking with the mindset that eventually we're going back down towards the lows. So a couple of shorts there. But the major thing I want to talk to you guys about before we wrap it up is, there's times as a trader where you want to make sure you're not focusing so much on, like, that one given trade. Make sure you never lose sight of the bigger picture. The bigger picture being your goals and, kind of like the net results of all your trades combined. So on a day like today where we open up and, we're taking out key support, everything's pretty ugly, it's one of those days where you got to make some judgment calls. And where trading gets a lot more difficult, and where I think a lot of money is lost unnecessarily, is that we're making decisions that are a little bit too much about, that one given trade, versus instead trying to make decisions that basically just put you in a position to reach your goals. So for example, we came into today in the mastery with positions in XLE and EMPH. And we got the call credit spreads on the SPX. So at the open, of course, it's like, okay, this is great for the short position. Like that trade's rocking and rolling. But the bullish trades, the calls in XLE and the calls that we had in EMPH, that can all get a little bit sketchy when the market is potentially taking out key support and ready to die. So this morning what we did is we closed EMPH for a small profit, like a 15% profit. Now here's the thing. All is said and done, EMPH was up 2% today. So those are the things where you can get caught. It still looks good. What if we hold on? Think of all the money we can make. Then I think back to trades that we had in NVIDIA, where if we had that mindset in NVIDIA, we would have gotten caught in that huge flush. So this is why I'm a huge fan of tracking your trades. All of your trades, right? Not just your wins, but your losses. You want to think more in terms of, you're trying to paint a pretty picture here on your spreadsheet. It's not so much about that EMPH trade, because that one trade is not going to take you to your ultimate goals, right? It's going to be the combined results. So with that kind of thinking today, we got rid of EMPH for a small profit. Right, what was that, 15%? And we got rid of the XLE calls for about a 30-35% loss. Now the XLE exit was it's a no-brainer. The reasons that we took the trade to begin with, no longer valid. Right? Those reasons, those things were no longer present. We bought the calls in XLE because you had your daily squeeze above your 21 EMA. And let me get the hourly chart here. And you had some buy signals in that positive moving average cross down here on the hourly. And that's pretty much become our combo for a bullish trade. Daily squeeze above that 21. lower time frame positive moving averages and buy signals. So all of that changes this morning. You take out your 21, you get a negative cross on the hourly, you lose your buy signals. At that point, it's like a no-brainer. You cut that trade off, and if you can do that, more often than not, you can get out of NVIDIA like we did back here at 178. You can get out way before it becomes a huge problem and it's crapping all over itself down here at 150. And at the end of the day, guys, that's kind of it's the hardest but the most important part of trading. Realistically, if I could spend one afternoon with you, I could show you the setups that you need to trade for the rest of your career. Like the setups, the entries, the exits, it's all super, super easy. When the A, B, C, D comes together, you buy XLE near the 21 EMA, you take profits at plus 2 ATR, or you take the trade-off for a loss if it breaks the 21 EMA. Like if you can work that game plan with the criteria that we focus on, it's going to work. The problem is, can you be disciplined enough to actually follow those rules? Okay, here's where I'm supposed to take XLE off. Yeah, but what if it holds at 50? What if? You got to kill that kind of thinking. Like that shit's not going to work in the long term. So when you wake up on a day like today where things potentially could get ugly and go against you, think about your bigger picture and think about your goals. Didn't mean to click that. I posted that in the options room yesterday when the market was peaking. Oof size, large. What I really wanted to show you here. My whole focus in the morning, like this morning, is not, well, what if XLE bounces off the 50? What if EMPH breaks out? My only focus is putting together a pretty spreadsheet. So in my mastery, and it's all so doable, right? If we can just be disciplined, especially with our indicator and with the kind of setups we're focusing on, right? My goal is that on a good month, we're growing the account by 10 to 20%. And that's with 5% risk per trade, right? Meaning the max potential loss on any trade is 5% of your account balance. And as you can see, we never take a max loss. Right? Our biggest losing trade was a 57% loss on NVIDIA. So if you're risking 5%, you lose about 2.5%, 3%. But the goal is when things are easy, right? When things aren't getting sketchy, when our trades aren't giving us any headaches, we want to put together 10 to 20+% months. If you're risking 5% per trade, and this is options trading, of course, it's a few good trades per month. That's not the difficult part. The difficult part is, what do we do when NVIDIA, Snapchat, Oxy, UNG, and XLE go against us? Imagine you sit there and you take it on the chin. You hold on to that trade well after it breaks your rules. Or even before it breaks your rules, right? You're seeing things in the market, and you get all caught up in the results of that one trade. Imagine if all of those trades turn into a max loss. I lose 5%, I lose another 5%, another 5%. That's 5, 10, 15, 20, 25, 30. You're down 30%. Not going to work in the long run. You want your winners to be bigger than your losers, but more importantly, there's nothing wrong with having a break-even month. And that's pretty much where we're at right now, halfway through September. So with the assumption that the SPX call credit spread works, if we don't do any other trades, we're going to be break-even on the month. Ideally, that's what an ugly month for us looks like. It's like, hey, we took a handful of trades, like one of them realistically worked, and we're about break-even. Perfect. I'm cool with that. I'm fine with that. If that's a bad month for us, then we're going to be in great shape. But what I don't want to do when things go against us is put ourselves in a position where we're jeopardizing the whole pursuit of the goal to try to grow our account by about 10% per month. Yeah, break even, down a couple of percent, that's okay. I don't have to spend all of October trying to get back to where you were previously. It's just lost opportunity, a lot of lost time. So that is that's the goal here, and really the goal is let's do this together for 10 years. And, frankly, regardless of your account size, 10% per month, guys, it's pretty stupid over the long run. Like, it's kind of sickening. 5-year period, you grow your account on average by 10% per month. Starting off with $100,000, let's pretend you don't have to pay taxes. $100,000 turns into $18 million. Right? That's insane. The winning trades, like that side of the equation, not that difficult. Here's the setup, here's the structure, here's where you take your entry. The hardest part is, what do you do when things get a little bit hairy? So the decisions we made this morning, all based on making sure we protect the 9% we made in July, right? The 11% that we made in August. We want to make sure we're not going backwards here. So when we take off XLE this morning, that one's kind of easy. The setup kind of crapped the bed. But for EMPH there, it's still a good setup. Didn't really break our rules. I'm not closing that trade this morning because this is, falling apart. I'm closing that trade this morning because locking in the small profits guarantees EMPH is not going to become a problem here and set us up for a difficult month of October. Would I love to have taken this all the way up to 340? Of course. But guess what? There's another bust coming. So, hope you guys found all that helpful. That is the tough part of trading. The setups, the entries, it's all kind of straightforward. When trades work, right, it's all kind of easy. When you wake up and it's like, okay, we got to make some judgment calls here today, it's human nature. Pretty easy to kind of fall into the hope and pray mentality. So focus on your goals, focus on putting together a pretty spreadsheet. And if you guys are interested, I will be live in the Mastery group this coming Sunday at 10 a.m. What time are we doing that? 10 a.m. Eastern, 9 a.m. Central, this coming Sunday. So if you guys are interested, come on by. I'll put the link in the description for the 30-day trial. It's like $7. So come check that out. We'll be live, run a couple of scans, put together the game plan for the week ahead. But otherwise, guys, hope you have a good weekend. Hope you found this helpful, and we'll see what she's got in store next week. But under 390, I think she's in trouble. We'll see. Talk to you guys soon.